Also, especially maybe to the new members of the PPI. So just a quick introduction about royalty range. So royalty range is a transfer pricing database provider, and we
So
have
it's a
number
royalty
of
range.
that. Yeah, and we have number of databases like company financial statements for TNMM analysis, service fees, loan interests, and of course royalty rates. And we work with more than 1,000 clients in more than 70 countries, tax administrations, consulting firms, multinationals as well. Now, when it comes to the benchmarking study itself, so yeah, of course, benchmarking study is a public comparison of a publicly available data, licensing agreements, and royalty rates, so that we could estimate an arm's length range of royalty rates for specific intellectual property. Now, typically, what we see, what our clients like the approach we apply the most in terms of benchmarking process is that it normally consists of three main stages. So first of all, we would have the quantitative screening. So to put it in a simple terms, this is a search in a database by applying some specific quantitative and qualitative filters to find a list of potential comparables. So on average, like we would expect to have 2, 3, 4, maybe 500 potential comparables at this stage. And it really, of course, depends on the industry. Some industries are a bit more rich in terms of comparables available. Some companies have, some industries have a little bit less data available, but yeah, this is just a general insight. Now, after that, once we have a list of potential comparables, we move on to the qualitative screening. Where we accept or reject comparables. So yeah, here we should have a quite straightforward reasons for acceptance, rejection. We have to be very consistent. And in the end, after the qualitative screening, we just proceed with the financial analysis, which is effectively, well, statistical analysis, where we calculate the full range of royalties, interquartile, arm's length range of royalties, as well as median. And of course, like intellectual property benchmarking is, let's call it, quite time-intensive procedure. We need to spend quite a lot of time in reviewing the data, and naturally there are a couple of things that could make our life a bit easier. So first of all, quality of the data. So if you work with high quality comparables, you will not have to spend that much time for the screening. So like quality of the data, it can be expressed in things like accurate summaries of licensing agreements, data is non-redacted, publicly available comparables, royalty rates are available, and so on and so forth. And of course, like the level of detail. So to make a comparability analysis, we need to have data as detailed as possible. So from the descriptions of owner of IP, licensor, and licensee to the DEMPI functional risk, cost, and asset analysis, these things are really important. And in the end, yeah, like ensuring that transactions you use for the benchmark King study is between unrelated parties. This is also one of the important aspects when performing the benchmarking study. And of course, during today's session, I would also love to show you a quick practical example. So for that purpose, I will use royalty rates database. And yeah, so we should probably start with the quantitative screening. And as I mentioned, this is the part where we basically select filters, apply specific filters to find relevant comparables, the initial set. So the more filters we have, the better. So like industry codes, keywords, exclusivity provisions, industry list, geographical coverage, and various other. So for the example case, we can run a quick search. I will use our search result set section, which gives keyword suggestions for the users. And let's imagine the case that, yeah, this is agriculture industry and we need to benchmark a technical IP like technology, patent, or something like that. So yeah, technology, we can say patent, maybe trade secret, know-how, so all these kinds of technical intangibles. And we just rerun the search. And what we get in the database is agreement summaries. Agreement summaries are accompanied by the text of the agreements in case you want to proceed with a further due diligence of the legal contract. But normally these summaries are more than enough to find relevant comparables. And as we discussed in the beginning, it is very important to have high quality and detailed information. So from the screen that I'm sharing, you can see that in our database, each agreement has royalty rates, so no undisclosed, no redacted royalty, so percentage is always visible. And in the end, this is what we will use for calculations for financial analysis. So these percentages like 1% as an example. And also in our database, you could find up to 50 comparability factors, including DEMPI functional risk, cost, and asset analysis. So yeah, I can actually even demonstrate that so you can see how many different comparability factors you can display. And in the end, if we open up any of these agreement summaries, we can take a look at these comparability factors in more detail. So some general things, of course, like licensor, licensee, were business descriptions, industry keywords, synopsis of the agreement. This is one of the main sections when performing the qualitative screening. The main reason is that here we find 1 or 2 sentence summary, which highlights industry, products, IP involved, and rights granted. Later on, dates, territorial limitations, exclusivity, extent and duration of legal protection, DEMPI functional risk, cost, and asset analysis, where we showcase whether licensor or licensee is responsible for functions like marketing, quality control over functions performed, who is taking risks, who is bearing costs as well, and investing necessary assets. So yeah, like the methodology here is very simple. So yeah, like marketing wise, 2 checkboxes to licensor side, 2 checkboxes to licensee side, so we're equally involved. While quality control, it's responsibility of licensor only. And yeah, like the functional analysis itself, it can be used to find very similar agreements in terms of functional risk, cost, and asset distribution, or it can be used in the end as a leverage to set the royalty range somewhere within the range that you calculate. And of course, the royalty rate is here, additional payments, if any, are visible, description of the royalty payment itself too. And also in the database, in case needed, you can take a look at the text of the agreement itself. So at the actual text of the agreement, in case you have some doubts, questions. So this is also a very important consideration, because if you cannot rely on a summary alone, if you want to take a deeper look, you can always take a look at the underlying source. And yeah, we have IP enrichment to help with comparability analysis, so patent and/or trademark numbers, synopsis of patent and/or trademark, and also image gallery, which showcases some additional pictures, drawings, blueprints, product examples, and additional information. So you can see that this is a very detailed agreement summary, and yeah, this is more than enough to perform the comparability analysis for the benchmark. Now, when it comes to the benchmarking study itself, so this is more or less the first stage. We have the initial set of agreements that the database returned based on your filters that you have selected. And after that, we would need to proceed with the qualitative screening. So out of these 264 agreements we found, we would reject some of them, we would accept some of them, so the qualitative screening is needed. In order to perform qualitative screening, we can use various approaches. One approach would be to download all this data in Excel and open the Excel file and do everything manually. Another approach would be to use our benchmarking add-on, where you will get a template, a framework for acceptance and rejection matrix. And on top of this, this acceptance and rejection matrix will be repopulated with some suggestions. So based on our experience, the qualitative screening, it can be split into these stages: general comparability analysis, remuneration analysis, and royalty rate analysis. So this is, of course, like typical approach that we use and our clients use, where maybe other approaches, but yeah, this helps a lot to make the analysis a little bit quicker. So during the general comparability analysis stage, we would normally look into the general characteristics of the license agreement and ensure that royalty base is comparable, that agreement is between independent entities, that agreement is indeed a license agreement and not sale of IP agreement. So this is our framework of the acceptance and rejection matrix. And also I mentioned that with our tool, you get some suggestions that are based on our benchmarking studies that we have performed. So quick example, like agreement number, let me just see, agreement number 223, 48, 184. These are concluded between related parties, or parties are non-commercial, non-business entities. So technically, this would be a straightforward reason to reject a specific agreement. So these suggestions, as I mentioned, will come based on our manual review and screening of the agreements. And yeah, like you can see in a sentencing that this agreement is concluded between related parties. And yeah, right here, company names do not look very similar. So the way we determined that companies are related, we looked into company filings and found that licensor has shares in licensee directly or indirectly, or if it's other way around. So yeah, and of course, acceptance and rejection matrix is fully customizable. So it's like, it has Excel-like features where you can add comments, include additional columns, disagree with our suggestions. So this is how it goes. Now, the general principle is that after general comparability analysis, we will have a lower number of accepted agreements because we rejected some of them. So if we click next, the second screening stage, which is called remuneration analysis, it will have around half of the data, so 128 items, potential comparables. Now, as the name of the screening stage says, it relates to remuneration terms. So the reasons for rejection that we take into account would be agreements involve equity compensation in addition to royalty or ownership transfer. Agreements may have conditional complex royalty structures. It can have split type of arrangements like revenue sharing arrangement, or it could be also a cross license. So another quick example, agreement number 5. Where is our suggestion here, saying that it should be rejected because of this ownership transfer, or agreement number 7, or any other. So if we take a look at the payment terms, we will see that yes, we do have a royalty percentage, 3% based on net sale. However, in addition, licensee is paying to licensor 12 million shares of common stock. So based on our standards, we would reject this agreement, and we suggest to do the same basically. And in the end, once we click next again, so we reach the more or less the final stage where our input is needed. So we rejected quite a lot of agreements and accepted some of them. And at this stage, we just need to ensure that we agree with the way royalties are used in calculations. So yeah, like what this means in practice. So some agreements like this one, it has a 5% royalty. And yeah, like the decision is very simple. We will use 5% for the calculations. More interesting are the situations like this, where one agreement has multiple royalty rates, like 8, 3, and 1%. Well, these are tiered royalty rates, variable royalty rates, and technically, you could use one of these percentages. You could also use each percentage as a separate data point for statistical analysis, or you can use an average. So like here, our suggestion would be to use an average value. We normally do this in those situations where royalty varies based on volume of sales, based on a license year. But of course, like it's not necessary to follow our logic and rely on the suggestion. You can customize it. You could say, no, we actually want to use 8, 3, and 1% royalty rates as a separate items. And yeah, we can now take a quick look at the preview at how the conclusion would look like. So yeah, like the median royalty would be 4%, interquartile range from 3 to 6%, full range up to 12. And if that all makes sense, we can just click next and download the output, the benchmarking study write-up. So yeah, this is provided in Excel file in our system. And the Excel spreadsheet, it will contain the full description of our exercise. So the way we started the search, which filters we applied, which agreements we rejected and why, as well as calculations. So yeah, this is more or less a write-up which describes the full process from the very beginning till the very end. So rejected agreements, reasons for rejection. We could also add comments in a database we will be displayed. Remuneration analysis follows the same logic. And yeah, step 3 and step 4, the calculation part, this is also available. And generally speaking, like using the add-on where you have a framework, suggestions could save you around 40 or more % of the benchmarking study preparation time, mainly because you don't have to start from scratch. And yeah, of course, benchmarking tool, like it provides you with these suggestions, write-up features. You could technically do everything manually by hand in the Excel file, but yeah, the goal here is to save a little bit time of the user. So talking about the benchmarking study preparation, so yeah, these would be, well, the main insights. You can see that once you have a very straightforward and clear logic, once you have several separate stages for benchmarking study preparation, and if the data is clean and structured, yeah, like the process, it's not that complex. So yeah, this is basically the main takeaway from the call, that intellectual property benchmarking could be very lengthy procedure, but if you work with high quality data, if your process is separated into separate stages, yeah, it's not that complex at all. So yeah, I would say that, yeah, this is pretty much it from my side as far as the main topic for today is concerned. So yeah, thank you everyone. And we can probably move on to the questions.
Thank you so much, Justinas, for your presentation. So now we can start our Q&A session. So if you have any question or any comment, you mute your microphone. Let us know if you have any question by the chat. Okay, I guess no one have any questions. And or I don't know, Jose, do you have any question?
No, just a comment. I mean, thanks, Justinas, for the presentation. I think the tool is very interesting, and yeah, actually, we had the chance previously of touching base with Justinas about it. So, thanks again, and very interesting tool so far.
Yeah, thank you, Jose.
Thank you, Jose. So if nobody have any other question or comments, we can start with our networking rooms and with the breakout rooms. I will explain you the dynamic real quick. It's just as our duo meetings. You have the first part of the breakout rooms to share experience, share your history, and if you have any question for our members or Justinas in the breakout room, you can do it. You can do it too. And after that, you can find ways to do business between you all and find business opportunity. And please let us know if you have any issue or any problem. We will